Morning everybody, Mike Niemiec here with some early morning grain and oilseed comments on this Thursday, September 5th. Overnight trade, we're steady a little bit better. No new lows, no new contract lows like we have been seeing. Yesterday we had a little bit of a turnaround day as far as what we saw on Tuesday. Wheat rebounded, the beans, which weren't all that bad on Tuesday, saw some gains. The meal rebounded as well. Oil, which was up on Tuesday, was down yesterday. The only one that didn't contribute was the corn. The corn market did make new contract lows in yesterday's trade. We had corn registrations and deliveries. We found out that the crop ratings were up for the week. The monthly crush number for ethanol was down versus a month ago and a year ago. And then add injury to the insult, the monthly exports for corn were down for the month, down versus a year ago. And even worse, the imports of corn for the month of July were higher than the month of June. So here we are not exporting corn and importing corn, not very good. Other than that, there's some optimism in the beans. We've been picking up our bean pace here of late in the end of the marketing year, so maybe we'll make and or maybe exceed the current USDA projection for the 18-19 marketing year. And for the first quarter for wheat exports have been running stronger than a year ago. Price didn't matter as far as yesterday's bounce. The open interest continued to expand across the floor. We're starting to get some private estimates coming on out for the USDA report a week from today. We don't have the whole report as of yet, but some of them. 168 for the corn yield, 167 from another. The USDA is currently at 169. Both of their crops are a little bit smaller than the current USDA projection for corn. Bean yields 48, 46. The USDA is currently at 48.5. Both of those a little bit smaller than where the USDA is at, and also with their bean production number. So the theme in here right now, it looks like the trade is shying lower than what the USDA is currently forecasting, both for yield and production for beans and in corn. Apparently, the U.S. and the Chinese are now going to set their meeting for the trade war talks in October. Apparently, that's been helping the equity markets overnight. I guess I just don't understand that one as we continue just to drag it along. But nonetheless, that was out overnight as well. And then we have Russia, Ukraine, the EU competing with us as far as wheat exports go. We also have the Brazilian and the Argentinians with bean and corn. I guess a lot of other couple stories that were out overnight as well. The U.S. attaché came out and said that he expects the bean imports from China to only be 80 million tons. The USDA is currently at 85. And then Argentina is looking at a record wheat crop this year coming on up, if everything goes well, of 21 million tons versus 19.5 a year ago. The weather forecast still has no cold air weather threats in the near term. In fact, in the 11 to 16 day, they're looking at above normal temperatures for the Midwest, so nothing threatening there. As far as the deliveries go, the interest there of late has been the ADM, which issued a lot of hard red winter wheat in the beginning, almost 1,000, is now pretty much stopping it all back and also canceling hard red winter wheat registrations. We'll have our ethanol report coming out here today. Export sales tomorrow. Those were delayed from Monday as a result of the holiday. So anyway, I don't believe there's anything purposeful as far as price direction at this time. I guess we're going to see if we can squeeze some more of the open interest shorts that came into the market here in the beginning of the week and maybe help pump up some life in our tech signals, that being RSIs and stochastics. Other than that, the fundamentals are still in my mind in a non-bullish environment as we work our way towards the next USDA monthly report a week from today. These are my opinions, not that of ADM or ADMIS. I thank you.